Hello, is it better? Okay. Is it better now? Can you guys hear me? I'm so sorry. Yes, better. I think something's wrong with my mic, so I need to wear my headphone instead. I'm so sorry about that. Okay, should I just start at the beginning again, or you just okay with this slide, guys? Should I just start? Restart? What do you think? Yes, okay, sure. Okay, better. Okay, so basically today the agenda we're going to talk about breakout strategy. Again, I'm so sorry about that. This is the agenda for today. We're going to cover what is the breakout. Okay, breakout versus liquidity grab, retest versus no retreat entry, managing failed breakout. Okay, so what is the breakout? So the definition for the breakout is one is that price move beyond the key structure level like support and resistance. Okay, and signaling potential continuation or expansion of the move. The and what drive breakout? One is liquidity. Second is the movement shift. The third one, news and volatility. Okay. Again, not all breakout are reals. Okay, most are trap. Okay. So the market are energy to attract breakout trader before reversing. So understanding this is the foundation of profitable trader. And why most trader lose on the breakout? One, it could be because you are entered too early, jumping in before confirmation. Chasing the move instead of wait for the proof. Second, chase big candle, entering after the last movement candle, buying the high or selling the low. Okay, so basically you need to wait for price to pull back and then you buy or you sell. I'm gonna show you guys later. First one, ignore liquidity zones, missing where institutional order cluster. This zone detect level reversal. Four, no plan for breakout. No predefined exit strategy when the breakout fail and price reverses sharply. Okay. Okay, now breakout was a liquidity gap. So whenever there's a true breakout, you're gonna see the strong candle body close beyond level. Okay. Follow through candle confirm direction, minimal rejection and small wick. Because whenever price going to break the key level like support and resistance, you're gonna see like really big candle. They're gonna have really small rejection. Okay. Structure shape, price make high or lower low. Volume was and volatility expansion versus liquidity grab. So long wick spike through the level, immediately price reversal after the wick, candle body closer back inside the range, occur at the obvious and well-known level, often during the low liquidity and session. Okay. Which is I'm gonna show you here. I'm gonna use gold for example. Okay. So talking about the true breakout. Okay. Strong candle. I'm gonna use the example of the USD in H4 candle here. Okay. This definitely this is gonna true breakout, right? From this level. Okay. Here. Right? Here. I'm gonna move back here first. Okay. Before that, okay, this is H4 time frame. Before that, I'm gonna move back here a little bit. Price was like this. Okay. In H4 time frame, whenever there is a ranging market or sideways, you draw the from the body and the body, not the wick. Because the body is the real price, the wick is just a liquidity. liquidity. Okay, you see here. So basically, gold was sideways, ranging. Now we go to boom. Okay, here. So whenever here you draw, you will see that this is going to be your big candle, right? This is really big candle that close above this is key level. This could be the resistance level in H4 or even smaller time frame, right? This is a true breakout with the wrong candle, small rejection. Okay, here, right? You see that. Okay. And after what about the liquidity graph, which is here? Okay. This is a breakout, which is just now I show you in H4. Okay, it's a breakout. Okay, it's breakout here, right? It's breakout here, and this one is a resistance level. Now it pull back, become your support level, right? This is gonna be your become your support level. If you go to the left, it will look the same, right? This is a kind of resistance, correct? Now it break out. Now it's resistance. Breakout become your support level. Okay, break below, you're gonna be support, and then break pull back again, become the resistance. Now break up the resistance level. This is gonna be your support level. I'm gonna put in the green one, right? So if I come back here, you're gonna buy. uh, Boom, right? I'm gonna go here. Let's say you buy at this level and price have come and rejected. It's about, let's say, almost 300 pip. But if you go down to the lower time frame, right, you will see that if you trade with support and resistance, you're gonna get like liquidity grab here, like hit the stop loss, because these are the resistance. For the first time, whenever you trade with support resistance, right, you need to look if price hit your if price does not respect your for example in this case support level, below is support level, is there is any OB, and then you can see that in the lower time frame, right, you'll see that there's a OB here or the block. This is the bullet or the block. Price, from here, okay, okay, the first time you trade the breakout here and retest and then you buy, okay. Price rising is about, let's just say 450 pip. 450 pip here. After that, okay, price pull back again. Let's say pull back again. If you want to trade with buy here again, you will see the price is like kind of push the price all the way down here, which is 15 minutes candle from the low to the high, 450 pip. After they have a quick rejection. So this is liquidity grab, meaning that whoever buy from this level, you're gonna get stop loss. You're gonna get stop loss here. Whoever buy, put the buy limit, like limit order. Let's say you put a sell limit order. Okay, sell limit order, it might come back, trigger your limit order. And let's say if you did not put any like take profit, it might go back and revert your stop loss. You see that after this, right, price come to your OB, bullish or the block, quick rejection, and go back and close beyond your key level, which is the support level. This is example of liquidity gap. So whenever you trade with support resistance, okay, you look beyond. If they're slightly close to, there is bearish OB for the resistance or bullish OB for the support level, and then you also mark out the zone, the level. If price is not this one, or you were to buy here, for example, you buy here and then you see price is all the way down, okay, maybe you go to the M15. M15 is just one candle, shoot, boom, and then quick rejection. Quick rejection. Maybe the low M1, for example. Okay, let's say you go to the M1, okay, this candle it trigger your buy order or you open your buy entry here and price keep falling and then back up again and after that falling now. Then you have to do, oh, where is the next zone that price likely to bounce or to reverse? You look, you cannot see anything, but then you go to the M15, okay, you will see the OB here, right? Bullish OB where at the support level be strong candle here. So your second pattern is that your first buy entry here and price keep falling. You see that okay, below here we have the OB. This is gonna be your second buy entry. Okay, and then let's say it trigger your buy entry where the stop loss for both below this swing low. below this swing low. So whenever you put the stop loss, you don't look for the recent swing low, which is here. If you put exact, what you see, you're gonna get this called liquidity. This is the money for the trader, for the big boy in the market. Smart money, they will call this one is a sell side liquidity. But if you put if you saw those side, they put a dollar sign. This means liquidity, which is price come and you don't like clear all support level and go all the way, push the price below the recent swing low here. You're gonna get stop out. After that, you see that it's quick reversal. So look for the second. Usually I will look for the second or third swing for my stop loss, not this. Should be this or even like further here. Okay, you see that you're gonna get stop out if you to put at this swing, right? They come to OB after quick rejection, close above the key level. Okay. So identifying a real breakout, they're gonna 4-point confirmation checklist. One, you need to look for a strong candle body close. So the body must close beyond the level. The body, that's why I tell you that you need to draw um the ranging from the body, not the wick. Okay. After that, you look for the strong candle body close above beyond the level, not just a wick. Okay. Have to be the body. Body close equal to commitment that they confirm that they're going to break out of the level, break out of the range. Okay. A week mean a rejection. A week is just a liquidity, just a week. Nothing. It's not a real price. It's just like um the high that the price the candle push make the higher or the lower price. Okay. Follow through candle. The next candle continue in the breakout direction. One strong candle alone is not enough. They say that momentum must persist. Let me look here. Is that true? Okay. Here's for breakout, right? You see that hedge flow breakout continue to the bullish candle, right? So what your strategy, you need to wait for price to retest and then you buy. It could be retest here or if the lower somewhere around the range, there's a OB, then you might see price have retest and then rising. Okay. Confirm breakout. Second candle is still in the bullish candle. This is another confirmation. All right, you will see that momentum might persist. Structure, price create a new higher high in the bullish or lower low in the bearish. This confirm a linear change in the market structure. All right, here. What do you see? It's all ranging. After that, what did you do? Price make the, now they make the, this one like maybe here, right? Breakout. Now they make the higher high. This was the recent high. They close out the range to create the higher high. So this is a bullish momentum. Okay. This bullish momentum is the same like here, right? For example, it's what ranging as well. Okay. See that, right? Breakout. And the second candle have to be bullish because it's still momentum still carry on until here. Price pullback, retest, right, of the bulk of the range. You don't get the buy entry somewhere. You get a buy entry here. And after that, price make the, this is the high. This is the high. Price go back to make the higher high. Pull back higher low and continue to make the higher high. Take out this high. Okay, and take out this high. Correct. Okay. So this is what it look like. Volatility and volume expansion. The ATR expansion, widen spread or visible volume surge confirm institutional participation in the move. So basically, if you look at the chart in higher time frame, if you see the strong candle body close, that push the price break above the key level, we already know that institution player in the market, which is this candle. this candle. This is our resistance. Break above, it's come to be support level, right? You see that? But it break out, this is strong candle. From after it's pulled back, become our resistance level, break out the level here, which is, you're gonna look here very closely, right? Institutional player in the market, this is the resistance, okay? And we have the OB here or the block, right? This is the OB. So by right, okay, price gonna respect the OB, right? No, the institutional puts the price break below the key level, which is support level, and break below the bullish OB. Break all the way down here to come to where? To come to this level, overlap support level here. Okay, we go to daily time frame, which is west, which is go to somewhere around here, right? If you go to, this is daily time frame, but if you're gonna look at H4, you're gonna look like this. Okay, the close below 4. So from support level now it becomes your resistance right now, right? This is the support level, break strong candle. All right. Spotting a liquidity grab. So read market manipulation. Long wick beyond the level. I already showed you just now the long wick and small body. Obvious or well-known level. Now let's talk about the level. Quick rejection. Why they have a quick rejection at that level? On the toot, toot. Mm, where is my level? Oh, here. Stay. Right. And price go to what number? Let's just say 5161. You know that usually go in respect to the round number, which is anything that means zero. That's called psychological number, plus minus 1 or 2 pip. You see that go slightly push down below 5160, 5160, go all the way to this level and have a quick rejection, right? Let's say you see it here, and another round number, the current price, right? Where is right here. You see that price push slightly beyond what? 40. And price close below. Right? This is a round number. And in H1, we saw there is basically this is a sell zone though. This kind of the supply zone in H1 time frame. Can we sell now? You see that it's about 50, 40 right now. Is that the confirmation? Yeah, right? You see that when price go in the zone, do you see confirmation? You see the rejection. You see the rejection? Yes, we already see the rejection. Okay. Um, Here, right? This is your confirmation. This is rejection in the zone, and this is the belly in gap. Is the confirm that price gonna fall, right? So now price falling back up again in the. I go to the M5. Okay, here, right? You see here, this is gonna be our sell zone, and price has made the divergence as well. So if you want to sell, this is gonna be your entry. Okay, so this is going to be your entry if you want to sell. Mm. Let's just sell somewhere around here. If you sell, right, you put the stop loss below this week. I think the level price could come to this OB for the scalping. Okay, like here, it's about, you can aim for 100 pip. You can aim for 100 pip. You can aim for 100 pip. This level. Okay, you see that they are respect to 5040. Okay, and now price is falling. Just now I went to M1. I see the rejection here, right? Then this is belly in gap. Price pull back. Now you can sell, right? You sell. If you want to target, we're gonna target here for the OB, which is just aim for 100 pip. If you want to enter here, you target here is about 100 pip. But the M5, you will see that there's a divergence here, bearish divergence. Okay, there's a bearish divergence here. Okay. Low liquidity section. So Asia section or pre-marketing conditions are exploited to run stopped before the real move begin. So sometime during the Asia section, you might see the market is being sideways, you know, which is here. So now, if you sell, you hold, but if you want to buy, we're gonna give you the entry, the box. Okay. If you want to buy one, just now is the OB here, as about, let's just say, um, around this level. But this one might be the high one. So if you can wait for slightly lower. One, two, three, four. You're gonna put a swing high and swing low here. This one is 22.6%. If you want to buy, this one is another level at 5017. Okay, 5017. Because my key level for gold in H4, I'm looking at this kind of um resistance as about 5060 or 66, around that zones. Okay, around that zone. So this is just rejection, and I can say lower time frame in H4 in H1. So if you want to buy, you can wait for price to pull back somewhere around here, 5017, I think, or 5027, 100 pip below, and then you can buy. Then you can target at 5060 for the next TP for the buy entry. Okay. So the market is hunting stop losses to generate liquidity, not making a linear directional breakout. So candle behavior pattern. Okay, reading the price commitment versus rejection. Large body equal to commitment equal to the confirmation in a real breakout. Okay, strong directional close with minimal wick show institutional conviction, high probability the move continues. Long wick equal to the rejection liquidity. Price tempted to move in the direction but close well off the extreme bear or bull, fall back hard, reversal likely, warning signal. Right now, for example, here, right? You see the long rejection. Uh, which is this level. These are for scalping. Okay, for scalping, whenever we see the rejection in the our zones, right? The next candle we're gonna sell. And you can see that this is try to push the price up, right? The bullish, and you can see that they have their selling pressure somewhere around this zone, selling and close wrong rejection. The next candle still bearish. So price pull back here, you can sell. Okay. Small doji indecision. So this, whenever you see the doji, right, neither buy nor sell is control. You will see this in the ranging market. So the entering here is the gambling, not the trading. So a lot of traders they don't like trade with the ranging market. Okay, they want to wait like price is breakout of the range, then they will trade. Okay, return entry. This is a safer approach. So whenever you see price breakout, okay, to me I like to pay breakout, but I'm gonna wait for price to come back, which is retest, and then I buy or resell. So we're gonna see when price breakout occurs. So price closes convexly beyond the key level with strong body candle. Second, price pullback. Market retraces toward the broken level, the former resistance becomes support level, okay, or support become the resistance. Level hold. Price test the level and show the rejection. Confirmation candle weak or small consideration at the zone. Okay, same right? We already see this is the resistance or this is the resistance. If price breakout. If price pull back, retest here, we gonna buy. Or if price break up the resistance, you will try to pull back and retest and then you sell, right? The pro is that high probability, better risk and reward, clear invalidation, and loss FOMO. Con may miss fast move because sometimes price may not come and retest. Okay, price break out and then continue to go uptrend. For example, this is the resistance level, correct? It's breakout, boom. Then we kind of, okay, we want to wait for price to pull back and then we buy. But sometimes price just continue to go moving forward. You may miss the entry. Okay. Retrace not guarantee. Not every breakout is gonna guarantee that price will come and back and retest. Sometimes it never come and back and retrace. It is similar like if there is a gap, right? Doesn't mean like price have to come and close the gap within a day. No, sometimes it will take week, takes day or take month for price to come and close the gap. Okay. This is require patience. So you need to be patient for price to come back and it test. Okay. Mm, okay. No literate entry, the aggressive approach. So when to use, so basically you to say, okay, I don't want to wait for the literate. What you need to do, use when to use strong momentum breakout, new driven price movement. So if you like to trade with the new, if breakout, you just follow buy or follow sell. You don't wait for the breakout because you know that there will strong volume, a lot of liquidity, including new events such as NCP, non-farm payroll, FOMC or CPI. We know that a lot of volume, so you just break out and then you follow buy or follow sell. Okay, high volatility session, London or New York open. Okay, breakout on higher time frame with strong conviction like H1 and H4 above. Okay, breakout the next candle you open buy or you open sell. Okay. Yes. Hello. Where is it? Hi guys. Welcome. Many of you guys sign up on Zoom because we have shift from stream in YouTube and now we start to stream in Zoom instead. Yeah, I know you're right. It's okay. We still have like 15 minutes to go. Okay. Um, entry trigger. Enter on the close of the breakout candle itself. Before any retracement occur, use tight stop below the candle body. What does this mean? So let's say if you see, I'm gonna use gold for example again. Where is my here, right? Let's say you just want to wow, let's say just now if you come right, just now if you sell here, you see that 50 pip for scalping close. Close for scalping, right? Okay. Let's just continue and see. Let's say I'm go on a higher time frame. Breakout, right? And remove everything first. Mm. Where is the breakout? Breakout. Just here. Let's just say like this. And this is the breakout, right? This is breakout. Okay. So whenever you see the breakout, okay, the stop loss, you have to be low this week. And okay, the next candle open, I'm gonna go to the M15. I want to see. Okay. Now, price have breakout. Now it's already pullback. So my buy entry is here. Okay. So my stop loss I put below this because you will say, oh, Peggy, too far. You have to know that you are trade on the H4. Usually H4, you're gonna see a lot of the like the stop loss will be really widened. Okay. Now I enter my buy, stop loss there, right? You'll see that price buy here, price come back is not hit my stop loss yet, right? And where is my take profit? You go to H4, you look, right? You enter buy where? You enter buy here. Price come back, right? To where? To this half body here and rising. The first TP that I want to like make sure I want to hit is always at the recent high, which is here my TP1. Okay, so from here we enter somewhere around here. The recent high is about 300 pip. That is good enough for gold because you know nowadays gold is move more than 100 pip in the lower time frame. I just want to make sure that no price has hit my take profit, so I always aim for the recent high. That's gonna be the TP1. If I want to hold my position, what I need to do, I want to shift my stop loss somewhere here to my break even, or you use the tailoring stop loss like every 30 pip, 50 pip. You can set that. Okay. Um, don't worry, you just join. Okay, at the end of the webinars. Okay, I'm gonna do the key level for maybe gold for you guys. Okay, and the where am I? Okay, so for the evaluated risk, higher probability of the entering a breakout, wider stop equal to larger position risk. So usually, okay, whenever you want to enter on a higher time frame, you identify the key level. Okay, you zoom in or you go down to M5, M15 to place the stop loss. You wait for price to pull back, then you have retest stop loss. Okay, better. So that's why every time my strategy is that I identify the key level like support and resistance in either H1 or H4, but most of the time in H4 time frame because I'm a day trade. Okay. After the price pull back or near or close to or approaching my key level, okay, I'm gonna go to the M15 or sometimes M5 to wait for rejection. Wait for the pullback. I see the pullback and then I enter my stop loss at the M15 support level or close to the recent swing low in H4. Okay. Emotional pressure from intermediate adverse moves. No confirmation safety net. Best practices, reduce position size versus retest entry. So whenever you don't wait for the retest, you just want to follow buy and follow sell. You can do that, but you need to reduce your lot size because it's why. Let's say if you pull back, you wait for the pullback, okay, you can have like one lot for example, because you're gonna have a tight stop loss. But if you're like don't wait for the pullback, the first candle that break out of the level and then you open buy, for example, you open buy at the second candle, you should reduce your lot size because high chance, I don't say high chance because sometimes you have to put in mind that price might, what if price, retrade on reverse to the level and then you can have another buy entry, for example. Okay. Because if you don't want to wait, because sometimes price may not go by, they might come back and revert or might it just go back and hit the stop loss. So reduce your lot size. Okay. But to me, I like to wait for the retest or pullback. Only on breakout from multi-day consolidation. So you wait for the breakout of the higher time frame. Okay. And the current goal, I tell you that now, right? It break now if I were to do in H4, it seems like H4 is not breakout. Right? You see, go is not breakout, and just now, right? I tell you that usually go is gonna respect the round number. So just now, price went all the way up to 5040 here, right? Ah, put the price above 5040, and now you can see that have the rejection. So just not able to sell at the 40, just now together with me. Price already, you see the rejection is 150 pip. Which one? Free breakout. Yeah. This because you missed, right? This one I'm talking about the breakout, which is no literate entry. Before this slide, I'm talking about the latest. It's for about breakout. Yeah, breakout. This one, breakout, you don't wait for the latest. What you gonna do? Okay, because they're going to be different. There will be two type of people, trader. Whenever you see the breakout, the next candle, which is you don't wait for the pullback, right? You just follow by, for example, right? Break the key level, which is resistance level. Okay, and then you just want to buy. You don't want to wait. This is a very aggressive approach. Okay, so what you need to do, you need to look for the strong momentum, which is the breakout, which is the candle. But before this slide, we're talking about okay, when price is breakout, you wait for the pullback or retest entry. Okay, which is here, for example, uh, it M15. Remember, I told you that it's a M15 price is a breakout. Okay, let's say you break out here. If you follow buy, you're gonna buy here, and then your TP maybe you aim for like a 5040. You need to take profit. Then just now I say that okay, this is the key level. Is the lower time frame, which is somewhere the resistance somewhere around here. Okay, and I told you that, I mean, before you join, okay, I say that, okay, in M5, there is a divergence versus, right? I said that is the bearish divergence, you can sell. And then I will tell you that my take profit, TP, I'm going to aim for the OB here, and then price have come to my take profit, which is here. But doesn't mean that I want to buy here. No, this is I want to make sure that I hit profit, which is 100 pip done from this sell entry just now at the pullback. And price went in the zone, which is see the rejection because you meet the sum of the slide, right? When price go to the zone, this is my zones. Okay, I move back here. Okay, right in the H1, not H1, sorry, H4. H4, right? H4. If you want to identify the zones, they're gonna be by my sell zone, right? My sell zone here, when price go in the zone, you will see that this is this is a rejection. This is a reversal. Price go in the zone, have the reversal here, right? This is uh my can say that confirmation, my rejection that okay, price gonna lower from here. Another confirmation, which is you can see this gonna be the bearish candle, right? Bearish candle. I know that price gonna fall here, so I sell. I wait for price to pull back. Why I sell here just now? The reason I wait for the pullback at the FVG of fair in M1. This is my FVG. May you miss this, but if you stay with me at the first webinar, right? Pullback sell, so we sell here. And then I say, tell you, I want to make sure that I'm going to hit my take profit to make sure, I want to make sure this is a OB and probably have make my, you see that, hit my take profit, slightly have the rejection because the OB in the lower time frame is not strong compared to H1 and H4, right? So from here, at the pullback, at the FVG, okay, it's more than 100 pip. And after that, you can the rejection and then it continue falling. So where is the next zone if you want to buy? Where you want to buy? Where you can buy? You can buy if you want to buy, okay? I set my entry. If you want to buy, but sometimes price may not come, at least 50% to 70.6%, I'm gonna buy. If price come to this zone, I'm gonna buy. I'm gonna buy one. Price have make the higher high, right? It's here. Because you miss, I'm gonna show you where. Eh, here. True breakout. Breakout with a strong candle beyond the level and structure shift. Try make a higher high or lower low. Higher high for the bullish, lower low for the bearish. And this one, right, price is breakout in the M15 breakout and make the higher high. So now I'm wait for price to pull back, but pull back where? To me, pull back at least at this zone. 5010 to 4990, somewhere around there, which is have to pull back at least 50% to 76%. I'm gonna buy from this level, from this zone. If just now you sell here, if you hold, it's about almost 200 pip, almost 200 pip. Okay. But if I don't do the webinar, I still hope I already hit my TP. So it's okay. Okay. Now, retest versus no retest head to head. Okay, so what we're gonna do, attribution, retest entry, risk level low, because US already trade, you're gonna have very tight stop loss. The SL should be the top of the FVG. Just now, yeah, my stop loss above the wick, above the wick in Herein, which is in M1, sorry. My stop loss above the FVG, you can put above this swing. You can put above this swing here. Why I will sell here? Because this is my sell zone, right? Whenever we see the sell zone, you need to wait for price to go in the zone. Whenever you go in the zone, this is the rejection. This is one of the confirmation already, and this is the bearish candle. I switch to M5 just now, right? I said, oh, my third confirmation, I have the bearish divergence here, bearish divergence here, right? When I see the belly divergence here, I did not sell at this candle. If you can sell at the open this candle, right? Price just falling. Let's just say 30 pip. After it's revert back because they revert back to the FVG in M1. Okay, wait for the pullback and then you sell. Let's say if you sell here, where your stop loss is there. You wait for the pullback, your stop loss is like nearer. Okay. No retest high. Risk potential medium. This is going to be high definitely because you don't wait for the retest. Okay. Win rate 6 to 70%. This is going to be the low win rate. Okay. Entry is moderate. This is difficult because sometimes you got the FOMO. Okay. You just see the breakout. Okay. Then the next candle, you just follow by. For example, there's the breakout of the resistance. You follow by first price just rising a little bit. After that, it's revert. Because why? Once sometimes price is may not come back and retest. From the reward, it becomes just a fake breakout. Okay, and they're gonna hit the stop loss. Okay, no strategy gonna give you 100% win rate. That's why you always set a stop loss. Okay, suitable for all skill level. No literate, this is gonna be experienced trader. Okay, that is all for today, guys. We still have 2 minutes. I'm gonna go here. Let me know if you have a question. I'm gonna show you, okay, the strategy for the breakout. One, you're welcome. You're welcome. For example, here. We are in H4 time frame, right? You see that there is a candle. This is really strong candle momentum selling off, right? And there is only institutional player can break the level. Okay. You can see that this is a very good example. A lot of the trader get stop out. I'm luckily that I did not get a stop out here because I did not trade during the New York session. In my time zone here is at 7 p.m. Okay, to me, I don't trade already. I'm very heavy active on Asia and London session. Okay, New York session is 5 to 10 minutes that I will trade because if I make a profit, I don't trade. Okay, I don't trade. And here you will see that this OB, Okay, it's not respect. Before that, below the OB, we have this. Okay, I'm gonna move here for example first. Breakout right here. And whenever you see the ranging or the key level it was ranging here, right? Price was ranging. I'm gonna draw from the body and the wick. Okay, I'm gonna do the recap before I end the webinar. Here, right? You see that price was ranging or being sideways. Okay, and I put the red one. The body and the wick is just a wick. It's just a liquidity. It's not a real price. The real price is the body, open and close. Okay. After that, price was ranging here. Eventually, it break out with this strong candle. The body is close above the range, close above the key level. Okay, so if you don't wait for the retest, you might have open here, but in the lower time frame, price gonna pull back to this level. Okay, let's say you open in the H4. I just go to H4. You open this, your open, right? You open here, but if um if the retest, you might need to wait for price to come in the retest here, but price is not okay. You follow by, you get the entry. Because very strong candle here, move all the way up. You still hold your buy entry. The next the Monday open, there's a gap up. Okay, now they sell, right? This is gonna be our from the resistance, it become our support level. This is our key level. And below our key level, we have the OB here. Okay, but on the day, boom, price is breakout of the key level, breakout of the OB here, all the way to this make another support level here. And now from the resistance, it become from the support become the resistance because it break out. It break out of the key level, go to this support level, and pull back. This become your resistance level. You can see this is candle. Okay. And after that, price was ranging, right? Boom, boom, boom. Okay. Then I mark out the body, the wick. If you trade with the OB, is this pending order? No, I don't put my pending order because my strategy is that when price is approaching the key level, I'm gonna move here. I'm gonna move here. I'm gonna oh, wait. I'm gonna move back here, right? I I want to see because whenever price approaching my key level, I don't put my limit order. And also you need to see whether if you put a pending order, is it the day there is a new big event coming, such as NFP, CPI or FOMC, you remove your pending order. Because price might break or you might get something like this. Usually I will wait for price to come to my level. Okay. I'm gonna go to the M15. Boom. I move here, right? You see that my M15 here, price have closed below my key level. This is my support level, okay? Before that is my support level. You can see price has break my support level. And this is the OB, right? This is the OB in the H4. Just have one rejection. Go break below. You see the rejection here. From the lower time frame rejection here, 200 pip, I think you're close already, right? Quick rejection, you have to be quick. I go to the M5. You see that rejection? Okay. And now you should know they have the reject. If price is rising here, okay, and now from the support become your resistance, then you need to sell. Why? Price have already closed below, you see the candle, close below the support level. Now they just give you a chance to exit your buy entry, right? Let's say you buy here, price is falling, you have another buy entry here, you should already exit the first entry at the break even, or you buy here all your profit. From buy, you should sell. And it break out, and it did break out. The body is break out. Go back to the H4, right? A strong candle here. So I don't put a pending order. I never put a pending order at all because I can say on my computer or I can set my notification. Okay. But if I already happy the profit of the day, I don't trade. I don't look at the chart. I can tell you that it take me about less than 10%, like 5 to 10% that I will trade during the New York session. I trade because I have the position opening from from the London to the New York. Okay, and then I got no chance. I need to hold. Sometimes I trade like EURUSD or GBUSD. It's still floating loss. Then I still need to hold my position until the New York session. But sometimes you already make a profit and still my uh my order still opening, right? And there is a news coming up later, I will just close my position. Or maybe I just cut loss a little bit because I don't want to risk if there is a high um new event coming up. Okay, I just cut loss. Okay, because I don't want to risk my capital. Okay, go back here again. Like go back here. Okay, here, right? Breakout. Here's a breakout. So right now, I'm gonna give you my key level for today for XAUSD. I think this I'm using the IC market chart. Okay, this is my IC market. Okay. This is gonna be first resistance in H4, and now so basically in H4 it's come back in being ranging again. I think I'm gonna highlight H4 being sideways. Okay, they're being sideways. But now they come from the resistance and it go back to the range. My level is going to be my first support here. But you can put this at your intermediate support level, which is you monitor at this level. Or because it was ranging, right? From here to here, I just remove. If price close below the body, you wait for the pullback and then you sell. You target here. Below here, you see that this is very strong. We have the demand zone here. So this is going to be the zone. I'm going to give you the zones. The zone is big, I know. The strategy is that you need to wait for price to come in the zones. And then you wait for rejection in the lower time frame. Okay? Price falling. This is support. The next support level we can put here. Second support level. Okay, in H4. What about the resistance? This is my resistance level. And you highlight it's going to be the zone because we have the OB or the block. Okay, before I end the webinars. Okay, guys, that should be all for today, guys. All right. Thank you so much, guys, for joining me today. I hope to see you guys again next Tuesday, guys, same time. All right, guys, happy trading and all the best and good luck. Bye for now, guys. Take care. Okay, bye bye. You're welcome.